Hi. This is Rastrith, and yes, we are back with one more video, one more revision video on branch accounting. Okay, if you haven't subscribed yet, please subscribe to the channel. Yes. So for this particular revision, I am using my handwritten notes. Of course, handwriting is not that good. Yeah, this notes link is available in the description box. If you want, you can go and download it. Yes. Starting with, what do you mean by, forget about accounting, sir. What do you mean by branch? Branch is nothing but where one head office feels that, where an organization feels that, okay boss, we are having a more customers, we are not able to cater it, or there are so many customers to the product which we are offering, but they are not able to come to our particular office or particular branch which is there right now. We want to reach them. Then they might decide to open one more location. They might decide to open their business in one more location. That location is called as branch. Okay. Sir, what do you mean by branch? Branch is an extended location of an organization other than its head office. Okay. Whatever the extended locations are there of the organization other than its head office, all those locations are called as branches, where business of similar or related to the organization are conducted. Okay, sir. So branches can be opened by profit making organization as well as not for profit making organization. So the organization whose motive is to earn the profit, they might also open the branches. At the same point of time, the organization whose motive is not to earn the profit, they might also open the branch. Okay, sir. Profit motive organization, why they will open the branch? To extend the business, to increase the profit, right? Whereas not for profit organization, to reach more and more people. Their purpose is to give service to the people, right? So to reach more and more people, they might open or they might go for different branches. They might start opening different branches. You might have seen Rotary, JCA, etc., etc. Yes. You can classify the branches depending upon the location. Depending upon the location, you can classify the branches into two: domestic branch, foreign branch. Domestic branch, foreign branch. What do you mean by domestic branch, sir? Domestic branches are the branches which are opened in the country, in the same country in which head office is operating. Domestic branches are the branches which are opened in the same country in which head office is operating. Whereas foreign branches are the branches which are opened in the country other than the country in which HOs exist, that is head offices exist. See, domestic branch opened and operated in the same country where organization is registered and having its head office, has its head office. Whereas foreign branch opened and operated in the country other than the country where the organization is registered and has its head office. Okay. Again, usually foreign branches will be independent. I will explain what is independent. But domestic branches, it can be dependent branch or it can be independent branch. I repeat, domestic branch can be dependent branch or independent branch. What do you mean by dependent branch, sir? Dependent branch means almost all the activities of a branch are dependent upon the head office. Whatever head office say, they have to do it. Almost all the activities will be taken care by the head office itself. For name purpose, they are having their one business there. That is dependent branch. Whereas independent branch, of course, they will listen to the head office. At the same point of time, they will be having their own transactions also. The branch might do its own transaction also. But sir, why this classification is important for us? See, dependent branch, what head office is going to do is, they are not going to keep a separate book of accounts for a dependent branch. Head office in its book only keeps the record of this particular branch. I repeat, dependent branch accounting records shall be kept in the books of the head office itself. Separate set of books for the dependent branch is not maintained, which means dependent branch usually will be smaller ones. Whereas independent branch itself is maintaining its own books. Branch is having accounts team, finance team, they are maintaining their own books. That is independent branches. See, branch Dependent branch which is completely dependent on its HO in respect of its operation, administration and further maintenance of its accounts. Even to maintain its accounts, branch is depending upon head office. At the same point of time, independent branches which maintain its own books of accounts and records its transaction independently. So the branch which records its transaction independently in its own book is called as independent branch. Usually foreign branches will be independent branch. Why sir? Because foreign currency might be different. No, foreign currency might be different. We can't put everything in a HO book. Okay. Now the question comes, what do you mean by branch accounting? Yes sir, we understood branch. Now what do you mean by branch accounting? Branch accounting is nothing but recording the transactions of the branch is called as branch accounting. Why we record the transactions of the branch, sir? To check the performance of the branch, which is basically your profit or loss, and to check the position of the branch, that is your balance sheet. Done. There are different transaction happens between branch and HO. Okay, there are different transaction happens between branch and HO. They are, one, HO might send goods to branch, right? HO might send goods to branch. That doesn't mean that branch should use only the HO goods. No, HO might send goods to the branch. So HO to sell. Okay, so HO might send a goods at a cost value or HO might send a goods at a invoice price. Just like our consignment. HO might send a goods at a cost price or at a invoice price. Okay, done. Next, goods which are sent by the HO, branch might return it to the HO, and HO might send certain assets to the branch. HO might send certain assets to the branch, and after everything, after sale and all, branch might send certain money to HO, periodical wise or something, that is cash remittance. Later, branch might sell the goods which is available. Which are the goods available? One, the goods which are sent by HO, as well as branch might also purchase some goods, no? So sale of these goods. Okay. And also branch head office might send certain cash to branch to meet its expenses. Head office might send certain cash to branch to meet the expenses of the branch. Okay, fine. So methods of accounting. For a dependent branch, there are 4 methods of accounting. For an independent branch is keeping its own books. It is just acts as a normal entity. Okay, separate entity it is going to be. Okay. So dependent branch, there are 4 methods, sir. Which are the 4 methods? First method is debtor method. It is also called as synthetic method. Second method is stock and debtors method, which is also called as analytical method. Third one is final accounts method, which is on the cost basis, and one more final accounts method, which is on the wholesale price basis. I repeat, dependent branches, books will be maintained by HO, right? And it can opt for any of the 4 method. Result will be same. In all the 4 method, result will be same. Which are the 4 methods, sir? Debtor method, stock and debtor method, final accounts method, cost basis, final accounts method, wholesale price basis. Okay. Now going to the first method, that is debtor method. It is also called as synthetic method. In this usually HO is not keeping much control over the branches. HO is not keeping control over branch. What it's going to do is it's going to open only 2 accounts, boss. 1 branch account, 2 goods sent to branch account. 1 branch account, goods sent to branch account. HO will record the transaction, right? Only these 2 transactions it will record, which means HO is going to record the transaction of the branch, only the transaction which are entered by HO with the branch. I mean, only the transaction of a branch with HO will be there, no? Only that will be recorded in the books of HO. All other transaction which is entered between branch and some other third party, that will not be recorded in this method. In this method, only the transaction which are entered between branch and HO, those are recorded. Just like our consignment. Okay. See, in this method, HO will treat branch as a debtor. So HO will treat branch as a debtor and they will open one branch account which is nominal in nature. Okay. different branch accounts are opened in the books of HO, because it is a dependent branch. For different branches, we are going to open different branch account. For example, we are having a head office in Bangalore and we are having a branch in Mangalore, Chennai, Hyderabad, Mumbai. We will open Mumbai branch account, Mangalore branch account, Hyderabad branch account, Chennai branch account, so on. All the transaction entered by HO and a branch will be recorded here. HO is going to prepare two accounts. One branch account, which is nominal in nature. One more is goods sent to branch account, which is again balanced with trading account. Okay, goods sent to branch account, it is balanced with the trading account. You know that. Okay. If head office sends a goods at a invoice price, loading will be there, no? That should be eliminated. To arrive at a net profit or loss from the branch. So to arrive at a net profit or loss, whatever loading will be there in the invoice price, that should be eliminated. This method is applied for the small size branches. Okay. Journal entries if we see. First, goods sent to branch by the head office. When a head office sends a goods to branch, what would be the journal entry? It might send at a cost price or it might send at a invoice price. When it is sent at a cost price, just imagine you are selling to some debtor. What will be the entry? Debtor account debit to sales, right? Here who is debtor? Branch account is debtor. So instead of debtor, write down branch account. Okay. 2, there it is sales. Here it is actually not sales. It is just to sell, sending a goods to branch to sell. So entry will be branch account debit to goods sent to branch account. At the same point of time, if it is sent at a invoice price, we have to eliminate our reserve, right? We have to eliminate our loading, right? So one entry will pass, normal entry, that is branch account debit to goods sent to branch account, and later we are going to reverse it. The loading portion we are going to reverse it. That is goods sent to branch account debit to branch account, loading portion. Okay. Next, head office might send certain cash to the branch to meet the expenses, right? So is it a head office expense? No. So expense we can't debit. Is it a head office expense? No, expense we can't debit. Whose expense it is? Branch account. So on behalf of debtor we are paying, that's it. On behalf of debtor we are paying, or we are giving our debtor some money. What will be the entry? Debtor to cash or bank. Same way, who is debtor here? Branch is debtor. So what will be the entry? Branch account debit to cash or bank account. Third one, cash remittance by branch to head office on account of sales. After certain period, after selling certain items, branch might pay certain money to head office. Branch might pay certain money to head office. What will be the entry? Head office is going to receive the money from a debtors, bank to debtors, which is basically cash or bank account debit to branch account. Okay. Branch might return the goods which is sent by the head office. If it is sent at a cost price, goods sent to branch account debit to branch account, and of course if it is sent at a invoice price, we have to reverse the loading. That is branch account debit to goods sent to branch account, that is only for the loading portion. If there is any abnormal loss, listen, who are the parties involved in when abnormal loss happens? 1, stock of the branch. 2, branch. 3, insurance company. Anywhere head office has come? No. Whose book it is? Head office book. Why we will record this in head office book? We are not going to record this in head office book. Sir, but how we arrive at a net profit, proper net profit? The closing balance of asset and opening balances of assets and liabilities shall be recorded in the branch account. Opening balances of assets should be debited, closing balances of assets should be credited. So your closing balance of your stock will be after adjustment of your abnormal loss, no? So the difference is directly getting adjusted. Okay. When you want to reverse your opening, when you want to reverse a stock reserve or a loading from your opening stock, what you are going to do? Stock reserve account debit to branch account. Opening stock will be coming in the debit side. Now you will credit it by stock reserve. At the same point of time, how about closing stock, sir? Again, closing stock is branch account debit to stock reserve account. Okay. Difference between the debit side of the branch account is a net profit. Difference between the debit side and credit side of the branch If it's a credit balance, net profit. If it's a debit balance, net loss. And such a loss shall be transferred to the general P&L. Okay, that is P&L of the whole organization. So what will be the entry? Branch account debit to P&L account. If it's a profit, if it's a loss, P&L account debit to branch account, because you know, if it's a profit, credit, loss, debit. Okay. Listen, opening value of stock, cash, debtor, assets of the branch is debited to the branch account, and closing values are credited to the branch account, and same shall be included with the HOs, stock, cash and debtor. That is, we are going to merge the assets of the branch with the head office, because finally branch assets are head office assets. So in the general balance sheet, we are going to merge the assets of the branch with the HOs assets and liabilities. Okay. So yes, one more point in this method is there might be certain expenditure which are incurred by the branch directly. How to ascertain that? You have to open a cash account. In cash account, you will get how much is received from the HO, how much cash sales you made, how much you sent back to the HO, how much is cash is remaining. So in between, if there is any balance, of course it should be for a cash expense, no? So that you are going to see. This method is very simple. Only the transaction happens between the HO and a branch will come. See, I can show you two balance brought down, all the assets you have written, goods sent by the HO will be debited, goods returned by the branch will be credited, and whatever the remittance done by the branch, that we are going to credit, and whatever the money sent by the HO to the branch to meet the expenditure, that we are going to debit, and balance of asset we are going to show it in a balance carry down, and we are going to get a general P&L which will be transferred there. And in the goods sent to branch account will be there, no, that account balance shall be transferred to the trading account. That's it. This method is only so much. Next, it is stock and debtors method. Okay. I will continue with stock and debtors method later. So I hope you enjoyed the debtors method. Bye bye. Hi. In the previous video, we were discussing about branch accounting. Under that, we saw like there are different branches based upon a location. One is inland branch, one more is foreign branch, and inland branch again depending upon the dependency on a head office, we are dividing them into two. One is independent branch, the other one is dependent branch. Whereas independent branch maintain its own set of books, whereas dependent branch do not maintain any books. Instead of department branch transactions are recorded in the books of head office. To record the dependent branch transaction, there are four methods. One is debtor method, second one is debtor and stock method, third one is final accounts method under a cost basis, as well as final account method under a wholesale price basis. And in the previous video, we discussed about a debtor method. Now we are starting with stock and debtor method. Okay. See, here what happens is, here head office try to keep control over stock and debtors of the branch, and also they will record all the transaction entered by the branch. Whereas in a debtor method, what we used to do, only the transaction entered between head office and branch were recorded. I repeat, only the transaction between head office and branch were recorded. Whereas in stock and debtor method, head office is going to record all the transactions of the branch. Okay. Earlier in the debtor method, it was pretty simple. Only two accounts used to be prepared. One is branch account, the one more is goods sent to branch account. Whereas here there are different accounts maintained. For example, branch stock account, branch debtor account, goods sent to branch account, branch cash account, branch expense account, branch P&L account, branch fixed asset account, and branch stock adjustment account. Also, branch stock adjustment account is also called as branch adjustment account. Okay. In a branch stock account, what we are going to do? In a branch stock account, we are going to record the opening stock of the branch. We are going to record how much stock we sent to the branch. And give me a second. Yes, how much stock is sent to the branch, and how much of that is sold by the branch, and how much is a closing stock. Those all things we are going to find out, and usually we are going to maintain it at a invoice price. Okay, we are going to maintain it at a invoice price, and if there is any difference, in the stock account, will be for two reasons. One, either might be loss in the stock, of the organization, or I mean branch, or it might be profit or loss. How, sir? You are recording everything in an invoice, you are recording a sales also, which is basically you are going to find out profit on sales. Using that thing will be transferred to branch adjustment account, which is also called as branch stock adjustment account. See, branch stock adjustment, why we are going to prepare is to record the transactions of loading. There will be loading, no, when the goods are sent at invoice price, that will be adjusted in the branch stock adjustment account. Whereas in a stock adjustment account, we are not going to adjust any loading. In a stock account, we are going to write as it is. If it's at a invoice price only. If it's at a cost price only. Whereas all the adjustment will be done in the branch stock account, stock adjustment account, branch stock adjustment account. Also you can call it as branch adjustment account. That balance of a branch adjustment account will be transferred to the branch P&L account. Later goods sent to branch account, that you know, same as our first method. Next is branch cash account. In this, all the cash transaction entered by the branch, either it might be with the head office or outsider, everything is recorded here. Branch expense account, here we are not going to show the split of expense like rent expense, electricity expense, carriage inward, carriage outward, all those things we are not going to show. Together we are going to prepare one account, branch expense account, and as it's a nominal in nature, branch expense is nominal in nature, we are going to transfer the balance to the branch P&L account. So branch P&L account, at the end we are going to prepare branch P&L account by taking the balance of branch stock adjustment, branch expense, and any other nominal items are there. By taking that, we are going to prepare a P&L, and we are going to ascertain how much is a net profit from the branch, either net profit or net loss from the branch, that we are going to transfer it to the general P&L, that is P&L of the organization, that we are going to transfer to the general P&L. And in the fixed asset account, what we are going to record? All the transaction relating to the branch fixed asset we are going to record. There are journal entries, we will see. First, when head office sends the goods to the branch, if it is sending at a cost price, in a first method what used to be, only two accounts were prepared. So it used to be branch account debit to goods sent to branch. Here we are splitting, branch account is split into so many parts now, different books, specialized, I mean different accounts, specialized accounts. So here we have special account for the stock, that is branch stock account debit to goods sent to branch account. If the loading is there, that loading is eliminated against the branch stock adjustment account, that is goods sent to branch account debit to branch stock adjustment account to the portion of loading. Okay, done. Second one, when the goods is returned by the branch, entry will be reverse, that is goods sent to branch account debit to branch stock account. If there is any loading included in that, what we used to do, we should adjust it against the branch stock adjustment account debit to goods sent to branch account. Okay. When goods is received from one branch to the, I mean one goods is received from the other branch, I mean it is of our organization only. Listen, branch will not be having any connection. Head office will act as a mediator. I repeat, branch will not have any connection. Head office will act as a mediator. So what it will do is, the branch which is receiving, that branch will be debited, that branch stock will be debited, and branch which is giving, that stock will be credited. That head office is acting as a mediator. Next step, in next method I will explain. Okay. Cash sale. When a cash sale happens, what will be the entry? Branch cash or bank account debit to branch stock account, not sales account. I told no, stock account is recorded at a actual prices, whatever it is there, not cost, invoice, something like that. Whatever it is given, that price only. If it's a credit sale, branch debtor account debit to branch stock account. If the bill is accepted by debtor, when the branch debtor accepts the bill, bills receivable account debit to branch debtor account. When money is collected from our debtor, branch cash or bank to branch debtor. If bad debt, discount allowed, etc. is there, that is nothing but expense. That will be branch expense account debit to branch debtor account. Depreciation on a branch fixed asset. Depreciation on a branch fixed asset. So you have to see branch expense account debit to fixed asset account. What if fixed asset is maintained by head office only? I mean, in branch fixed asset is maintained by head office only, then it will be branch expense account debit to branch account usually. Okay, so sorry, branch expense account debit to fixed asset, because we are only maintaining, no, we are only maintaining, same entry it will be. If branch expenses are incurred by cash, branch expense to cash or bank. Later we have to transfer that branch expense to the P&L, as it's a nominal in nature, branch P&L to branch expense account. If there is shortage in stock, that stock account balance shall be transferred to the branch stock account. Listen, there might be a question in which they will give how much is a gross profit. When they give how much is a gross profit, what we can do is we can find out a gross profit. We can find out a gross profit in the stock account, that will be transferred to the branch adjustment. After that also, if there is any balance remains, that is nothing but loss of stock, that also should be transferred to the branch stock account. Okay, I repeat, they will give a gross profit percentage and all, that should be applied on a sales, and we will find out a gross profit. That gross profit, after that gross profit also, if there is any balance in the branch stock account, that is nothing but loss of stock. You can see in your questions in this class, I mean in this revision session, I am not looking at a question. There is a question based upon this. Opening stock loading would be there. What would be the entry? Stock reserve account debit to branch stock adjustment account, whereas loading in the closing stock, branch stock adjustment to stock reserve account. I mean all the reserves loading will be adjusted to the branch adjustment account. Even the balance of your branch stock account shall be transferred to the adjustment account. Later from adjustment account we are going to take it to the branch P&L. From branch P&L we are going to transfer it to the general P&L. So when it's a profit, we are going to transfer, I mean gross profit or gross loss will be found out using a branch adjustment account, that we are going to transfer to the branch P&L account. So what would be the entry, sir? Branch stock adjustment account debit to branch P&L account. Loss means, of course, we have to debit it. So branch P&L account debit to branch stock adjust account. Transfer of net profit or net loss. How we are going to transfer, sir? We are going to transfer to the general P&L account. So branch P&L account debit to general P&L account, and net loss it is general P&L account debit to branch P&L account. That's it. There are two questions in this method. You can go through it. Next one is final accounts method upon a cost basis. Final accounts method on a cost basis. Listen, it is very simple. Assume your branch has some separate entity. You are going to prepare a branch trading P&L in the name of branch. For each branch you are going to prepare a separate trading P&L account, and balance of the trading P&L account will be transferred to the general P&L account, because head office itself is preparing a branch P&L account. Head office itself is preparing a branch P&L account. See, this method of branch accounting is applicable for every branch, whether dealing with goods or service. Under this method, a branch trading and P&L account and a separate branch account for recording a branch related transactions are prepared and maintained. Branch trading P&L determines both gross profit and loss as well as net profit or loss from the branch, that shall be transferred to the general P&L. Okay, see, it is simple. To opening stock, to goods sent to branch, less return by the branch, to gross profit. By sales, cash or credit, there will be a goods in transit, abnormal loss might be there, closing stock will be there, gross loss might be there. Same as our normal P&L. To gross loss, to salaries, I mean to gross loss, to salaries, to rent and salaries, petty cash expense, abnormal loss after claiming the insurance, because when abnormal loss happens, what will be the entry? Abnormal loss account debit to trading account. After that, insurance company might pay certain money, and you might have to charge something to P&L. So what would be the entry? Bank account debit. For example, your abnormal loss is 10,000. Insurance company is paying you 7,000. First entry will pass. Abnormal loss account debit to trade account. You recognize the loss. Now you have to write off the loss to the P&L. But you are not writing off whole loss because your loss is only 3,000. Because out of 10,000, insurance company is paying you 7,000. So bank account debit 7,000 to bank account debit 7,000, P&L account debit 3,000 to abnormal loss 10,000, like that. So that 3,000 will be there, no? P&L, that is coming here, and net profit that shall be transferred to the general P&L account. Next is final account method, wholesale price method. Listen how it works. How it works? Simple. Give me a second. Okay, how this method works? Simple. I will tell. Listen. Listen. There are two, right? One is head office, one is branch. One is head office, one is branch. Actually, head office might send completely to the branch, or head office might deal with customers also, right? Branch, of course, it deals with customers. Now head office might send goods to branch as well as customers. Whereas branch, it will directly send to customers only, completely to the customers. So for the customer, branch will send at what price, sir? It will send at a selling price, which is also called as retail price, Now head office might give customers at a wholesale price or at a retail price also, whereas branch will be to the branch. Head office might send at a two prices. Wholesale price is nothing but just like a invoice price only, okay? Branch might send at a cost price or wholesale price or invoice price, it might be, you can call it as invoice price also. So when a head office sends it at a cost price, the third method which we saw, no, final accounts method, that would be used. Whereas when a head office sends it at a wholesale price, this method is going to be used. Sir, in this method, that is fourth method, final accounts method, wholesale price method, what is the difference between third method and fourth method? Simple. Here in third method, branch, all the stock used to be recorded in the cost only. Branch, all the stock used to be sent at a cost and recorded at a cost only, which means there was no chance of loading. But when a head office sends a goods at a wholesale price, how it will send? It is simple. Cost plus wholesale price profit. You will get a wholesale price. Cost plus wholesale price profit, you will get a profit. Now listen, normally we will do, okay? But one thing you listen. We are going to split our head office and branch, okay? One column will do head office, one column will do branch. Both we will record together, P&L and trading and P&L. Now listen carefully. Let us assume head office sent a goods to the branch at a wholesale price. Value of a goods is, let us assume 1,50,000. Goods sent is 1,50,000. Okay. When head office sends a goods to the branch, it will record 1,50,000 just like a sales, no? It will record 1,50,000 just like a sales in the credit side, and all the expenses will be deducted from it. We are going to get the profit. So profit of this also included. Let us assume wholesale price profit is 10%. Now profit of 15,000 is already included in the books of HO. I repeat, profit of 15,000 is already included in the books of HO. Done, sir, done. Everything is done. branch will receive at a WSP and keeping it at a WSP. Branch is doing nothing. Fine. But let us assume out of the goods of 150,000, out of the goods of 150,000, let us assume 50,000 is unsold. I mean closing stock. 50,000 is closing stock. Tell me guys, tell me one thing, whether profit which is booked by the head office 15,000 is completely received? No, right? No, because out of the goods sent, 50,000 is still lying in our organization. It's still lying in our organization. When actual profit comes when you send it to the customers. So don't you think, as there is no actual profit, we should reverse the profit portion of that? Of course, sir. So closing stocks profit portion, that is 50,000 into 10%, will be reversed, charging it to the stock reserve. From whose account, sir? Here students will do lot of mistakes. Everyone will be writing it off from the branch profit. No, branch received at WSP, recording it at WSP, selling it at a retail price. So branch profit they are recording it as a retail price minus wholesale price, not retail price minus cost price. Head office they are recording it as a wholesale price minus cost. So in the books of head office there is a wholesale profit. Wholesale price profit is there in the books of the head office, not in the books of the branch. That's why from the profit of the head office we have to write it off. So in the P&L account we are going to write it off against the stock reserve. Okay, you can do opening stock, upon that you can write and you can show it in a credit, and closing stock you can show it in a debit, or netting off you can show it in debit or credit side. Opening, closing minus, if you do, you can write it off in the single line as a stock reserve, your wish. Okay, other than that everything is same. Head office will record opening stock at cost, purchases at a cost, goods sent to branch at a wholesale price, sales by head office to customers at a retail price or a wholesale price, again goods lost abnormally at a cost, closing stock of goods at a cost. But when it comes to the branch, opening stock it will record at a wholesale price, goods sent by HO is wholesale price, goods in transit at a wholesale price, sales to the customer at a retail price, goods lost abnormally is at a wholesale price, closing stock at a wholesale price. Like that. See here, in the given example, I don't go for the numbers. See, we have done so much. Goods, head office sent around 15,12,000 goods to branch. So branch received, out of that 252 is a closing stock. So upon that there is a stock reserve, 252, that we are eliminating to stock reserve. Opening stock was at cost. We assume that opening stock was at, no, opening stock wasn't there in the branch. That's why there is no stock reserve on opening stock. See here, as goods are sent by HO to branch at a wholesale price, wholesale profit is booked on such goods at the time of transfer in trading account of HO, right? At the time of transfer only it is booked, but that is not realized yet because that stock is laying with us only. So as closing stock of a branch reflect the balance of goods received from HO, wholesale profit element present in the closing stock of a branch. So finally organization branch is what? Head office plus branch, right? Organization profit is equal to head office profit plus branch profit. So we have to eliminate the stock reserve, unrealized profit. So as a closing stock of a branch reflect the balance of a goods received from HO, wholesale profit element present in the closing stock of branch should be reversed in the P&L and HO as it's not earned. Okay, sir. Done. Next is accounting for an independent branch. Accounting for an independent branch. See, when a branch is huge, it keeps its book. It keeps its separate book, and branch will maintain books and it will open one account called HO account, whereas HO will open one account called branch account. Okay. So HO will maintain just like a debtor method, whereas branch will maintain its complete book. See here. When a transaction of a branch is huge, such branch might maintain its books on its own. Branch might use the goods which is sent by HO as well as it is a independent. Sometimes it might purchase from outside also. Okay. Branch will prepare HO account and HO will prepare a branch account to record the transaction entered between HO and branch. Okay. If any difference between the HO and branch books, HO account in the branch books and branch account in the HO, same shall be adjusted. I mean same shall be rectified. Usually reasons will be two. One, goods in transit. Two, stock in transit. Goods in transit, stock in transit. Okay. Because goods in transit means HO had sent a goods. Branch is not yet received. It will record only goods received, no? That's why it will be adjusted in the books of HO. Branch has remitted a cash to HO, but HO not yet received. So HO will record only received money, no? So here in the branch it is adjusted like that. These are the only two things usually which leads to the difference between HO account and a branch account in branch books and HO books respectively. Okay. At the end branch P&L will be transferred to HO. Okay, general P&L. Balance sheet of the HO will be amalgamated with the balance sheet of the branch. See, there are certain journal entries. When the goods sent by a HO to branch, in the books of HO, what will be the entry? Branch account debit to goods sent to branch account, whereas in the branch account it is goods received from head office to head office account. When a goods is returned, reversal entry. When the branch expense is incurred by the branch only, branch expenses incurred by the branch, who are the party? The service provider to the branch and the branch. What HO will do? Nothing. So no entry in the books of HO, whereas in the branch it is expense account debit to cash or bank or supplier. When the branch expense is paid by the HO, whose expense it is? Branch expense. But who is paying? HO is paying. So basically on behalf of our branch we are paying. So as branch is our debtor, we will debit them and we will credit what is going out, that is cash or bank. So branch account debit to bank account. Whereas for branch it is an expense, but it is not paid out of cash or bank. So who is paying on our behalf? HO. They will become our creditor for the transaction. So what will be the entry? Expense account debit to HO account. Later, purchases made from a parties other than a HO. So branch is making certain purchase from outside. So in the HO book no entry because HO is not at all involved. Whereas in the branch book it is purchase account debit to supplier or a bank depending upon credit purchase or cash purchase. When a branch make a sale, of course HO is not involved in it, no entry in the books of HO, but in the books of branch it is debtor or a bank account debit depending upon credit sale or a cash sale to sales account. Later certain debtors of a branch is received from the HO. So for HO money will come. So bank or cash account debit to, it is not our asset boss, it is branch asset. So branch will become our creditor now. So to branch account because we are receiving on our branch behalf. Whereas for branch money is not received but debtors is decreasing. Money is not received, debtors is decreasing. On our behalf our debtor HO is receiving. So HO account debit to branch debtor account, or you can say debtor account because your own book it is. Okay. Payment by HO for purchase made by the branch. HO is paying, it is just like expense paid by the HO. Branch account debit to cash or bank. In the branch it is purchase to HO. Purchase of asset by the branch. When asset is purchased by the branch, HO no entry, but branch asset account debit to bank or a provider of such asset, that is liability basically. When an asset is maintained by the HO and purchased by the branch, so maintained by the HO, which means it is already there in the list of HO asset, so it is one more increase, but HO is not paying, branch is paying, which means branch is like treated as our creditor in the books of HO. So what will be the entry? Branch asset account debit to branch account. HO cannot write the asset, sorry, branch cannot write it as asset because that is not our asset. Although we are using it, it is HO asset. So HO account debit, as they will become our debtor because we are paying certain money while purchasing the asset to bank or cash account. When the depreciation is charged, but asset is maintained by asset is maintained by branch. HO no entry, it's the expense of branch. So what will be the entry in the books of branch? Depreciation to asset. Whereas HO is maintaining the assets, then branch expense it is. But whether asset is decreasing, there is no asset to decrease, no. So in the branch it is depreciation to HO, whereas in the HO, as it's not the expense of HO, as it's the expense of branch account debit to branch asset account. When the money is sent by a HO to branch to bank, whereas when it is received by the branch, it is bank to HO. When it is sent by the branch to HO, then in the HO it is bank to branch, in the branch it is HO to bank. When the goods is transferred between the branches, see, this is how it works. Let us assume Kolkata is a head office, Agra is a branch, Delhi is a branch. Now when a goods is sent or money is sent or bills receivables, bills payable, any transaction is happening between the branches, directly no transaction. Agra will debit or credit the head office, later head office will debit or credit the Delhi, or Delhi will debit or credit the head office, later head office will debit or credit the Agra. So no transaction in the branches directly. I mean, they cannot debit or credit the branches because control will be with the head office. So when it is transfer in the head office books, what we will do? Receiver branch account debit to supplier branch account, because supplier branch will treat us as a debtor, they will make debit, we have to make them credit. Receiver branch will treat us as a creditor and they will make us credit, now we have to make them debit. So in the books of HO it is receiver branch account debit to supplier branch account, whereas in the books of branch which is sending the goods, HO will become just like a debtor. Although you are sending to some branch, you are not going to debit the branch, because for you HO is the one who is taking the responsibility. So HO account debit to goods received from HO, and later if you are receiving, then goods received from HO to HO. You are not going to credit the branch which is sending you. Okay. There might be certain service charges which HO is bearing on behalf of a branch. Again, branch account debit to service charges or branch account debit to bank, whereas in the branch it is expense account debit to HO as it is paying. Cash in transit would be there. It is not yet recorded in the HO because it is not received. Only how much is received, that is recorded. Now to rectify, we have to record it as it's an asset, cash increasing, debit it to branch account, cash in transit account to branch account. Whereas in branch it is recorded, but it is not matching with HO because it is not recorded in HO. So cash in transit to HO. Goods in transit, again HO, goods in transit account debit to branch account, goods in transit to HO. Basically whose book you are doing, based upon that the rectification takes place. So to incorporate a branch trial balance with a HO, you have two methods, first method and second method. Second method is also called as abridged method. In the first method, what we will do is, all the incomes of the branch will be transferred, all the expense of the branch will be transferred, all the liabilities of the branch will be transferred, all the assets of the branch will be transferred. Okay. In the second method, final net profit or net loss will be transferred. We are not transferring income and expense. We are final figure, that is net profit or net loss will be transferred, and asset or liability is not transferred. Difference between asset and liability is what? Net figure, right? Difference between asset and liability is a net figure, so that will be reflected in the HO books. See here. First method, after receiving a TB of the branch, HO will prepare branch trading and P&L account, and result of the same shall be transferred to the general P&L account. Later, branch asset and branch liability shall be taken into the asset and liabilities of the HO. Okay. Whereas in the second method, this method is applied where no information other than net profit or net loss is given. If there is no other information, only net profit or net loss is there, you have to apply second method. Okay. Net profit or net loss of the branch shall be transferred to the general P&L. Branch assets and liabilities shall not be incorporated with the HO. It is not at all added with the HO. Whereas in the first method, HO is going to merge assets of HO as well as branch. In the second method, no. Only HO assets will be reflected in the asset side, HO liability will be reflected in the liability side. Now, the asset and liability difference will be there, no? That will be your branch balance, that will be reflected in the HO books. Branch account, that is difference between branch asset and branch liability, shall be shown in the financial statement of the HO. Okay, that is incorporation. Next comes the foreign branch. Sir, what do you mean by foreign branch, sir? Branch which is operating in the country other than the country in which the head office is located. I repeat, branch operating in the country other than the country in which HO is located. Okay, that is foreign branch. Okay. What foreign branch will do? Foreign branch will be independent. Okay, foreign branch will be acting as an independent, and it will record the transactions, and it will send a books to HO, and HO will incorporate it in its books. But crux is not that. Here the problem is foreign branch will record its transaction in its currency. I mean the currency of the country in which it is there. For example, our branch is there in US. Our branch will record it in US currency, US dollars. Whereas in India, our head office is there, no? We are going to record it in rupees. So we can't directly incorporate, right? We should convert it. So conversion is the problem now. Okay. There are three methods. Okay, net investment method, current and non-current method, temporal method. Forget about it. Listen very carefully. How we are going to convert? Basically, we can divide trial balance items into non-current, current and trading P&L items. Okay, non-current are the non-current, either it might be liabilities or assets. That thing you are going to record it at a historical rate. I mean you are going to convert it at a historical rate. I repeat, non-current assets or liabilities you are going to record it at a historical price. I mean, for example, asset you have purchased in 2016, $10 lakh or $1 million, and at that time the price was 65. Now you are going to multiply 1 million into 65. 1 million into 65. You are not going to take today's rate. You are going to take historical rate. Okay, deal, sir, deal. For non-current, okay, for non-current assets and liabilities, we have to take a historical. Done. For current, sir, current is current. No, you never know. Today or tomorrow you might have to pay. So we will keep it as updated as possible. So we are going to record it at a closing rate. But yes, current liability, stocks, there is a difference. Stock, there is a changes. Okay. So current, you are going to record it at, you are going to convert it at a closing rate, sir. Yes, closing rate. Next, trading and P&L items. All the items which are revenue in nature, those will be recorded at an average rate. All the revenue in nature items will be recorded at an average rate. That is opening plus closing divided by 2. Sometimes in question only they will give how much is average. So it will be recorded at average, because sales is happening from the first day till the last day. You don't know, in a different rate it is happened. So you will take an average. Purchase is happening from first day to last day. You don't know when it is happening, at what rate. So you are going to take an average rate. But in the trading P&L, you should be careful that opening stock will be valued at a opening rate of that particular year, because opening stock it is. Opening rate only applicable. Closing stock will be valued at a closing rate, because it's a current asset, right? So closing rate. Provided that, listen very carefully, for the items which are available in the HO book, for the items which are available in the HO book, what are the values reflected in the HO is there, no? That only recorded. For example, goods sent to branch will be there in the HO book, as well as it will be there in the branch as a goods received from HO. It is there in dollars, it is there in rupees. Instead of conversion and all, already we have a information, no, in rupees. That only we are going to take. Okay, sir, done. What else? Branch account balance might be there in HO. HO balance will be there in the branch. Branch account balance might be there in a HO balance will be there in the branch. HO balance will be there in the branch at a dollars. Branch account balance is there in the HO at a rupees. So now we are going to take this rupees only, provided that if there is any cash in transit or goods in transit adjustment, we have to make and we have to take. Okay, sir, done. Later we are going to prepare trial balance. Okay, prepare trial balance by taking this conversion rate into account. And now debit and credit of TB might not match, because in that particular dollar it is matching. Here we are doing Jatre by taking so many rates, right? So Jatre is a fair, I mean different colors, like versatility you can say. It's a Kannada word. If you are a non-Kannadiga, it's a Kannada word. For the the thing which is much complicated, we call it as Jatre. Okay, slang. So there might be a difference. Okay, that difference we are going to transfer to the difference in exchange. If it's a debit difference, charge to the debit side of the P&L. Credit difference, charge to the credit side of the P&L. Done. And we are going to prepare a trading and P&L account. Later you can use the first method of incorporation or second method of incorporation. If you use the first method of incorporation, you are going to transfer the incomes, expense and assets, liabilities. If you are going to incorporate a second method, you are going to record a net profit or net loss, and you will keep a branch account balance. You don't incorporate asset and liabilities in your books. That's it. That's the end of branch accounting. These notes will be available in the description box. So if you want, you can download it. So thank you. We'll be coming with the departmental accounts revision in the next video. So please subscribe to the channel and please keep the bell icon on, okay, for your further notifications. Thank you all. Bye bye.